What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is March 22nd, 2022. Please go ahead, click the like button on this video and subscribe to my channel. Today we're going to talk about the price action in the indices. We're going to go through my trades for the day. Before we do that, quick first disclaimer: nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades. All right, so let's dive into these indices. Another solid day of box scores. We had the S&P 500 finishing up 1.17%. We had the Nasdaq QQQ finishing up 1.97%. IWM small caps finishing up 1%. Dow Jones up 0.78%. And we had the ARK Innovation ETF finishing up 4.67%, our big winner for the session. Pretty much everything closed towards the upper end of the daily range, except for the small caps, which finished about halfway through the day's range. We had yet another day of volatility crush. All of these vol indices down for the 6th day in a row. And you can see we had strong breadth with 73% advancers in the small caps. So we've had just a blistering rally. Take a look at some of these names. We had Apple up 2.08%. We had Microsoft up 1.64. We had Google up 2.78. And our big winner for the day was Tesla up 7.91%. I actually initiated a short position in Tesla after this crazy move to the upside. Let's take a look at our sector map. And what I'm noticing is that there is a changing of the guard here. So we have the Chinese technology names that are at the top of our momentum list. They finished the day up 8.07%. And then we have these ARK Innovation ETFs all bunched up towards the top of our momentum list. We have the ARK F Fund, the FinTech Fund of 4.47%, Next Gen Internet ARK W of 4.79%. And you can see solar energy is towards the top of this list as well. Some of the noteworthy decliners, the only two decliners actually, we had gold miners down 1.02%, and we had the energy ETF finishing down 0.74%. It does appear that this whole war trade that was going on, where it's like gold miners are going to be very inflated, the VIX is going to be very inflated, those sorts of trades, and a lot of these inflation hedges, that war trade, the Ukraine and Russia trade, is pretty much coming to an end, and it looks like it's starting to be unwound. In some of these growth stocks, which were totally not in vogue, it looks like now we're starting to see some flows back into those groups. Style factors, we can see the momentum style factor is up 1.82%, and we had our growth style factor up 1.72%. This was a very risk-on tape today. And then, of course, we have, this was originally 9 days left. I believe there's 7 days left now. This quarter end rebalancing. There's a lot of investors and traders out there that they're wondering, how could the market be going up? This doesn't make any sense. And the market is based on supply and demand. So if there's, several $100 billion worth of equities to be bought, it doesn't really matter our thoughts about the market. Those equities just have to be purchased. And then you can see as well the seasonality as we get into the end of March is very strong. And April is seasonally a very strong month as well. All right, let's take a look here. Let's go over to our headline indices and let's check this out. So the S&P 500, my trend model is currently at a +3. And take a look at where we are. So we've had day 1, 2, 3, 4, 5, 6 of this rally. And it is pretty remarkable how much ground we've covered in just 6 days. Take a look at this. We are now moving almost completely through this monthly value area, and we're well above the 20-day simple moving average. We're actually pretty extended away from the 20-day moving average. We're getting to pretty overbought levels. We're trading right up to the upper Bollinger Band. That's actually why I added to some short positions today. But we do have our monthly value area high up at 4563.75. If we were to get to that level, given this backdrop and what we currently know about the environment, I think this would pretty much be like a gift to sell into. If we got to that 4563.75, what I've been noticing is like really ever since like this day, like March 16th, everyone was like, how is this happening? How could the market be up? And I think there were a lot of players that were short the market from these lower levels. And up here is like, no way. And they're trying to cling to their shorts. And now as the market gets more and more extended, I think we're starting to see some of these players having to cover their shorts at pretty suboptimal locations. So again, given this backdrop, I think if we get up to this 45.63, that's more of like a, take this gift, sell into the rally. So that's why rather than me like adding hedges and, oh, let me get bearish on the market, we're at 4,100. I'm starting to layer on some hedges into my portfolio while the market is, just really at this point getting sort of overbought. Let's take a look. Speaking of overbought, if we check out our hourly chart, take a look at this. On the hourly chart, we have our weekly value area high at 43.47. We are just like in rarefied air at this point. Like we are very extended away from that weekly value area high. And again, I think we want to make sure that we're staying open-minded. Could we get up to 45.63? Absolutely. It could happen as early as tomorrow. I think it is important that even if you think like on a macro level the market's going to go down or what have you, if we have all these equities that need to be bought, we have investors that are positioned a little bit too bearish, etc. Like there's, it's perfectly feasible that we get some more upside in the market. All right, let's take a look here at our VIX. The VIX finished down 2.51%. We've had 6 candles that are completely red in the VIX. And what's so interesting is like the market really does trend and the market really does incorporate new information very quickly. So like we might be in a phase in the market where it's like the market just cannot go up. What is going on? Like we just can't make any progress. And then all of a sudden a switch is flipped and then it's like boom, now the market just won't go down. So it is very important to be malleable and really just not get caught in a bias. As we start to approach these lower levels of the VIX, does the risk reward get a bit skewed out of your favor? Absolutely. And that is why I'm taking this opportunity to add some of those shorts opportunistically. Could we feasibly get down to maybe like a 20 handle in the VIX? It could certainly happen. I would just think given all this uncertainty, I think you're sort of playing with fire, because the way I see it is like on the good side, maybe the VIX gets down to 20. And that's like very optimistic. Nothing bad happens. Like for whatever reason, the market can shrug off all these concerns. And then in terms of like downside, or really for the VIX upside, could we get back to 36? Absolutely. So given that backdrop, it's like, am I going to play for that extra like 2 points down in the VIX? For me, I'm sort of willing to lighten up on my exposure. VVIX as well. Take a look at this. We're down 0.68%, but the VVIX is pretty much bottoming out here. You can see the last 2 candles in the VVIX were green. All right, let's take a look. We already checked out our S&P 500. Let's check out our Nasdaq. And because I'm recording this video a little bit later, we can already see this new candle for the after hour session. The futures just open. It's about 6:03 as of this recording. The Nasdaq just cleared this monthly point of control at 14,625.25. So could the Nasdaq also get up to that monthly value area high? It could certainly happen. But that being said, we're so extended away from this 20-day moving average that it is tough for me to add exposure here. So that's why I've been a little bit more measured in my trading. Like I really have not been trading all that much over the past few days. Russell 2000, this one you can see broke out from this monthly value area, and the Russell 2000 has kind of just been consolidating for the past couple days, and it's a little bit down in the after hours. And then we have our dogs of the Dow, which are also making some nice progress, starting to move through this monthly value area. All right, let's check out some individual names that I'm watching. Upstart. So this one actually caught an analyst downgrade. I own some common shares in Upstart, and I like trading the options in this one as well. if growth stocks really are just bottoming out for whatever reason, this is a really good candidate. And the fact that it caught an analyst downgrade, it gapped down about 10% in the pre-market session, and then it moved to the upside and actually finished positive. So it's really showing there's definitely some underlying strength here. One of our members of our group was able to capitalize on this one very well. So definitely good for him. This was a pretty monster intraday move, about 11% to the upside intraday. So yeah, definitely going to keep watching this name. But it almost looks like a lot of people in a market environment like this, they'll get confused and be like, I don't know what's going on. How could the market be going up? There might be some headlines that are going to come out in the coming days that we're just not even aware of, a piece of information that some of these institutions might actually be aware of. Another thing that could be leading to some of this market strength that we are seeing is just the fact that the market pushed above the 20-day moving average, maybe just due to like rebalancing, some players that got too bearish, too short the market, etc. And a lot of the CTAs, the commodity trading advisors, the commodity trend advisors, those strategies, the CTA strategies, they're trend followers. And one of their key metrics that they track is the 20-day moving average. So we got a couple things going on. These pension funds are buying due to the quarterly rebound. We have CTAs buying. And so, yeah, we're getting this really nice momentum move in the market. Let's take a look at some of my trades for today. And what do we have here? So, yeah, into this market environment, I'm not like chasing the market higher and like, oh, let me just buy everything now. Like, definitely not doing that. I closed out the remaining 2/3 of my MP common shares for $49. I paid $44.32 for those. And I just think some of these inflation hedge names could take a back seat for a bit, locking in the gain. So again, MP, I've only been holding this name for about a week or so. I bought this one, I believe, on the 16th. And it's put in a very nice move. With some of these inflation stocks, like for instance, like the Alcoas of the world. And these names, they hit a parabolic top and then very quickly bounce back to the highs. If there's one group that these asset managers are overweight, it's these inflation hedge stocks. I think at this point you're really playing with fire, because like for instance Alcoa, this really broke out like at the end of last year. It was trading down at $50. Now it's at 85 from 50 over the course of like 3 months. This is not the time to be like buying into this name. Like, oh, it's a fresh idea. Like, not really. I think at some point these investment managers have to start reducing these names. MP could get caught up in some of that rebalancing. So that's why I took this trade off. That being said, MP still looks pretty solid here. I think this one could end up breaking out if everything goes according to plan. But yeah, I just took the 10 or so % gain that I had in this stock. And then what else? As we got towards the end of the day, oh yeah, the other trade that I did on the long side, I added some TLT calls for May 20th. And this is along the same vein. We have like what I think is peak inflation fear in the market. And these treasury yields, oh my gosh, wow, look at this. So like this, for instance, is our 10-year treasury futures. Take a look at what happened here. Just a complete bloodbath. These are getting very oversold at this point. Like these inflation concerns, I think, are increasingly getting baked in, and the pricing into the bond market. So I took this opportunity. Like if you look at the 30-year treasuries as well, they're just getting absolutely sold off. So I said, you know what? I'm going to get long some TLT options. This is the long-term treasury ETF. This thing is trading at its lower Bollinger Band, really just got crucified. So I got long the 130 call options. So put that trade on, and then I added some hedges onto the books. So I got long some Tesla March 25th, 965 puts. This one is definitely more of a speculative trade. And I just sized this one for max loss. So this is one where Tesla, what I was watching today is like, okay, this one's had 6 up days in a row. Totally get why this would be bullish. Tesla is like the apex of clean energy. But as I looked at this, I looked at the hourly chart and I was like, man, we're hitting this Venom R1 pivot already. we're making a really nice move here. And so I entered those put options just in case we get some sort of retracement of the move. Because it's always that sort of way. When the market's going down, everyone's like, oh, the market will never bounce. Trust me, like it's going down in a straight line to zero. And then when things go to the upside, there's going to be no mean reversion here either. I think one of the main themes of 2022, which is going to be a lot different than the 2020 or even 2021 environment, is this theme of mean reversion. We're buying things after they've gone up like 20% in a straight line is not going to be the best strategy. At that point, it's really going to be play for that reversion to the means. That's what I'm doing in Tesla. And then I also have been accumulating these SPY puts. I started off with a pretty small position. Now I'm starting to build it up. Now I have a 2-star position here. I got to May 20th, 440 puts for 1090. And so yeah, with this S&P 500, if we look at the bigger picture, this is really what I'm gearing up for. So on the weekly chart, granted, year to date, we are still trading negative in the market. Could we make a retest of this 20-week moving average? Absolutely. And I think that would be a pretty logical place for this market to really start coming under pressure. Because yeah, we do have the Fed that is tightening. The QE program literally ended on March 11th. So it's not like, I see some people saying like, oh, this is a new paradigm, like we have a new bull market starting. And I don't really think new bull markets are born at the end of QE programs. Like from what I've seen, that's just not really, it's not really a thing. So we'll have to see what happens. We have put those hedges on. Let's take a quick look and we will check out some of our options flow for today. Look at this. We had a ton of Tesla call activity coming in. I noted earlier, I put this in our Pristine Capital Discord. I also posted on Twitter. We had some 5,000 strike SPX calls going up. You can see we got a bunch of puts going up in SPY. Let's take a look at Google. Google had a nice day. A lot of call activity going up. So yeah, you'll notice as the market hits its lows, no one is loading up on calls. It's all puts going up. And now after 6 days of a pretty epic rally, now we have a lot of call activity. Alibaba, this one's very interesting. Let's leave off on Alibaba. This name, they increased their share buyback and they had a nice 11% day to the upside. See, it looks like it reclaimed this bottom of value. So this group definitely catching some momentum, definitely something to keep an eye on. All right, everyone, with that being said, that about does it for this recap video. Hope you all had an awesome trading session. I will see you all tomorrow.